You caught that one. I had missed that one, so appreciate that. All right, very good, guys. Let's move right into the Queen's Court. Last thing we do each and every Tuesday, actually, it's our segment we have with Coach Emily, where the head of the Dynasty Investors Trading Lab here at Tackle Trading, we get to submit her a pick, a stock pick, whether it's an investment idea, trading idea, you name it. We get to make that decision. She gets to decide whether it's good enough to live another day or whether we get our heads lopped off. And I see the executioner does have his sword over here with Coach Matt. His
First
favorite
of
thing.
all,
It's his
I
favorite thing.
always have my sword.
That's right.
I'm just telling you, bro. I'm just saying, take deep breaths. We do not want
Good.
to be a
I'll
YouTube
Sir
clickbait
Lancelot
fight.
it right now if you don't stop.
I'm just saying.
Queen, you're up. Where do you want to start?
Oh, let's go with the dude with the sword. I mean,
That's
geez,
right.
how can you ignore him? Let's have Matt go first.
Well, technically, I'm still dead from last week, but we'll act like that didn't happen. No, I kid. Uh, like I said earlier today, I don't really need to detail the analysis here for Queen's Court. I've discussed it a few times over the course of the last week, and obviously, I gave the analysis here earlier today. But when you're looking at the Queen's Court, my Queen's Court pick here today, Queen, I'm looking at the combination of the analysis on gold's price recovery over the course of the last 3 weeks, looking at GDX to really kind of continue that type of price movement that got front run on gold. Nice little recovery. I just love so much. There's so much that I put into the zone. Like you heard me on Chico say, I like the four handle, right? It's because I like that hypothetical scenario of that support playing out. I can see it playing out in previous cycles in Chico. And so here on the zone, you're looking at a really good zone of support right there between 30 and 31 on GDX. You look at that on the weekly chart, you see that same zone over here get tested multiple times. And you come in here, and the only question is what stock is kind of your pick of the litter in gold, because you got a lot of, I don't want to say you got a lot of great gold mining companies, you got a lot of similar gold mining companies. And so you got your Barrick Golds, and you got your Gold Cores and Rand Golds, and you got your KRs of the world and AUYs of the world. And obviously you could very easily just come out and just play GDX. GDX is a wonderful way to get access to all of the gold miners. Obviously, you have a little bit of silver and platinum and palladium and copper mixed in, a lot of that. But the primary tradable instrument there is gold because of the mining. So you can certainly just come out here and you can look at GDX and get all of that diversified basket there. Whenever I'm looking at this type of analysis, though, from a stock perspective, I typically go to Newmont Mining and then Barrick Gold, which is the biggest gold company in the world. I like both of them. I cannot really point to any discernible differences from a fundamental perspective, and quite frankly, I can't really do that from a technical perspective. I feel they both work out in identical timelines. You get fairly similar cash flow from both of them. But when I looked at the fundamentals here today on Newmont and gold, I had the same conversation I did last year in December when I was deciding which one of these stocks to put on the Tackle 25. Barrick Gold, they got the nomination then. They're going to get the nomination again. I love the fundamental nature of this company. You're talking about a company with a 14 PE ratio. The sector has a 14 PE ratio. Forward PE ratio looks perfectly fine as well. You don't have valuation concerns here. Technically, you're at the low price on the chart. You got to love that support level. And while I said we're still in the hypothetical recovery situation, I do like the zone to start accumulating. And I don't even like it from a naked perspective, because I think you want to start the accumulation now. And I think you want to start cash flowing now, and I think you want to open up the risk graph when you do see those breakouts, when you do get that nice little pop and GDX starts that recovery process. And so I like an equity position for Queen's Court, and you got to kind of play around with the monthlies here. Obviously, we only have 17 days left to go in September. That's too short of time frame here, and so I do like working either the 31-day weekly, But because this is Queen's Court, I'm going to come just to systems, and systems do go to monthlies because of liquidity. And so I'm going to go out to October. That allows us to sell that 34 Delta call option, the 21 strike price, bring in $46, $47 of cash flow, which is about 2.3% return on investment. You also get cherry on top here, Queen. Cherry on top. You like cherries on top of ice cream? Everybody does. Okay. Cherry on top, 4.3% dividend on top of that. You're acquiring at the low price. It's a fundamentally solid company. You can cash flow on it in the neutrality or where the risk is perceived, and that's at the low price. You open up the risk graph as you start to break out and start trend. I love the game plan here. What do you think?
I will let you know my thoughts after everybody else is gone, but thank you for
I look
today.
forward to you killing Mark.
Well, my queen, may I add something to Barrick Gold?
Yes, you may.
I actually last night thought I was going to go Barrick Gold with my pick today, and then some news broke on the company I chose, and I went a different route. So I did, some additional
the news
research.
broke when he asked me, and I said I'm going Barrick, and he said, "Okay, I'm going to pick
whatever
my
the
second
news might have been, the news broke.
I kid.
But one of the things, Barrick Gold, about 10 years ago, they had a huge debt problem. Their credit was downgraded. I mean, there was even like those rumors that you heard of, like from ExxonMobil last year of bankruptcy. Their debt has just went in a straight line down over the last 10 years, to the point where the company actually has become, what was the exact number? In 2020, reported $3.4 billion in free cash flow, an important metric for me on the stability of a company, to say the least. I mean, that's a whopping free cash flow number for a blue chip company at these valuation levels. They're diversified mining operations, but a lot of them, there's less geopolitical risk. Like all of these blue chips, they have operations everywhere around the world, so you never know when a mine flare up or a worker strike or geopolitical. I mean, they have so many in Nevada. Less geopolitical risk. Those were some of the additional things I wanted. Even though Matt wants to chop me off with the head, I thought it's.
Nah, I don't want to chop you off. I gave you. What are you talking about? I gave you Chico Faz earnings report today. I'm on Coach Mark's side.
But I live to serve the queen, no one else, so I thought I'd provide that information.
Thank you. I appreciate
Thank you for that.
Okay.
While you stay there, Mark, and just go ahead and present your pick.
I do not have a nice conservative pick like Barrick Gold. Listen, like I said, there's two things I know in life: women's clothes and sports betting. Give me Fubu, Fubo, Fubo TV. All right, this one is a ride or die for me. I have been interested in this company since it became public a little while ago, just because it was a niche little company. I like things that have uniqueness to them. It's why I always like Netflix at the start. Something that doesn't really fit into the box. Well, is it cyclicals? Is it tech turn? Is it defensive? Something that is just its thing. And Fubu, if you do not know what Fubu is the world's only sports-focused live TV streaming service. So, we have a streaming play focused on sports, kind of a groundbreaking type of company. This is a high-growth company. And, whenever you have these niche little stories that start out, because we're at the very beginnings of this story. Well, what I always am interested in are a couple key metrics. You hear me talk about this on Roblox, for example. I don't care. I want to know revenue, and I want to know users. I want to know that you are growing. Because like we say, growth company, got to grow. It has to. I mean, it's what gives you validation on whatever your thesis you have. Because I can have, hey, I like streaming companies. I like sports betting, and we're going to get to that here in a second. I can like these themes, right? But if I'm not growing, then what's the point? Well, for those new to Fubu, the company has beaten and raised its subscriber and revenue guidance every quarter, every single one, without exception, since going public last year. Just had earnings a little while ago, added 91,000 new net subscribers, bringing their recent quarter up to nearly 700,000, smashing analyst expectations of 600,000. They also, in this, it has just been a non-stop guidance upgrade. Like I said, every quarter. They raised their full year subscriber guidance to just shy of 1 million at around 910 to 920. And that was up 100,000 from its previous guidance. Revenue, 196 growth year over year, beating analyst expectations. I mean, this company raises guidance and beats, raises guidance and beats. Subscription revenue, ad revenue, all of the key metrics in which they gain revenue have been going up. Another key metric that I look at on these type of companies that there are new subscription type models is how much engagement, how much retention. You're seeing numbers in all of these areas be very healthy. They are not only growing their audience, but they're retaining their members, which is probably why they keep jacking up guidance, because they keep retaining at higher and higher levels as well. So we got a new company, new product, new idea out there in the world that is starting to show. This is one of those things that when you start to get really interested in a company, we talk about this all the time. New company comes public. Well, we want to see it in the numbers for a while before, we can spec and we do a little bit here and there, but we want to see it in the numbers and we want to see that it is in fact growing. And I think the consistent raising of guidance, the consistent growth of numbers is a good solid foundation. That's not the reason I'm so excited though. The reason I am so excited about Fubu is what Fubu calls internally, their management team calls the flywheel. Now, the flywheel, an internal phrase to describe this, is the products that they are launching in the coming quarters that will not only add revenue streams, but will help reinforce this ecosystem engagement within the app and product itself. They are launching Fubu Sportsbook, which was essentially trying to tap in to the online betting theme. The DraftKings, the Caesars, the MGM, the Penn. I mean, sports betting is one of these. Everybody sees it coming. We've been talking about tackle trading for years. This broad theme pushing to online betting. The legalization, the social acceptance, knowing governments need the revenue streams because we know they can't be fiscally responsible, knowing that these online betting was going to be more and more in theme. And you're also seeing it culturally in the NFL acceptance. The NFL has fought against online betting forever, right? Lay down the hammer, making a lot more of those type partnerships. So we're seeing that big picture theme play out from a broad scale, which is why, I'm sure Tim owns DraftKings. Different people have different areas of the Penn National Gaming. I mean, all of these, everyone has their fan club on the particular and have a case for that. One of the things I love about the potential of Fubu and sports betting is this flywheel concept where there is this integration between live stream video and the sportsbook itself. This is a unique feature for Fubo TV that the sports betting app will allow its users to watch and bet from the same platform. Totally unique. If this thing hits, and the concept of being able to place one's bets while on an app while watching sports, nobody else has something like that. For somebody to do something like that, they would have to create media partnerships. And so let's say someone does pull that off. I don't even know how that would work because I can't even see logistically, because I've thought about this many a night. Logistically, how would a DraftKings, how would they create the media partnership and the app? It just seems like a lot of cumbersome that Fubu is building within its product itself. They're also doing a lot of online free games, interactive games on soccer matches, and this offering prizes, versions of fantasy type games and sports interactive games, all intended on this flywheel concept to create user engagement within the app, within the ecosystem itself. So this sports betting concept, I think it is a massive potential opportunity. And you are starting to see the regulation dominoes fall. Just this morning broke that they had gained approval in Iowa with the Racing and Gaming Commission. This is following on the backs of several other states where they have started to get the regulation approval in partnering with different casinos in different states. Those regulation dominoes are starting to fall, giving them access. Sports betting isn't alone. They recently had a partnership deal with Vizio and LG Electronics, putting the app of Fubu on the TV itself. I think this is equally massive. We've seen how this worked with Roku. Part of Roku's huge success and subscriber growth came from partnerships with TV brands. And these type of partnerships, giving accessibility, giving brand recognition, which is still low but growing, as we see in the subscriber numbers. These type of TV manufacturing partnerships, huge part of Roku's growth. I think there is similar type growth opportunities there. I'm not alone in this. Analysts have came out recently from Evercore, jacking up their price targets. Here's a couple quotes. Cord cutting as viewers shift away from linear TV to streaming, a mixed shift of advertising dollars to linear TV to streaming, and growing demand online for sports betting from an analyst from Evercore. Oppenheimer came out raising their price target. Most OTT providers have focused on low-cost entertainment offerings, forcing sports fans to remain tethered to pay TV. Fubu is exploring the opportunity in sports by providing a comparable viewership experience at a lower cost to its TV counterparts. I love the story of Fubu. This is a go long, own shares for me. Now, I will probably do something stupid like sell a low delta naked call, not naked call, covered call at something like, oh, that's way out of the money. I'll just get a little bit of credit and probably get called out and look back like I do, because I tend to like try to cheat the devil sometimes. I love the pure growth story here. I love the long. It is a company I would be delighted at if it fell in price to actually build a sizable position. I love a starter position here on the growth story on the potential of Fubu with numerous catalysts along the way. I think the continued guidance will continue to be strong. I see strong growth here. I see good opportunity here.
Hey, Chucky, can I offer a suggestion on that covered call?
Don't sell it.
It's your no.
I said I will probably do something stupid. That's not what I'm recommending.
But what I'm suggesting, it's your pick. I'm not going to add to your pick unless you want me to.
No, go ahead.
Okay, if you are going to sell that covered call, I do see a very simple management technique right here. 26 delta call option, $35 strike price. You're selling deep out of the money, right? Now volatility is high here. Volatility is high here. But if you're going to sell a high volatility covered call, the one benefit you have is the range. You get to sell deeper ranges. You can still get legitimate cash flow. You're getting $1 against 29. That's legitimate cash flow here. You're selling a 27 delta, and here's what I do like about it, right? Because I typically do not like covered calls with 71% implied volatility. Here's the combination of it, though. You can sell the 35 strike, which coincides with some major resistance levels. $35 on this weekly chart. If we break this out to the weekly, $35, $35. You basically say, I don't care whatever happens underneath 35. I'm just going to rip that covered call every single month. If it ever breaks 35, you buy that thing, you open up that risk graph, and you let that sucker fly.
I forgot one critical point. Will you go to a daily chart, Matt? Because I always like, I'll develop my long-term themes, analyze the fundamentals. I love a support test that gets support level that gets tested multiple times. So underbelly has had huge, and this, high volatility fits into the underbelly. Huge volatility
100%.
in the last, a couple months. And boy, it came down to 25 over a period of a month, 9 times. Bounce. Like found buyers every single.
And it wasn't just this stock in this space. Take a couple peek at a couple other stocks in this space. So you got TGNA. you see the same type of consolidation in the same time frame. Look at that trigger there. Same space. When you look at Fubu, you're seeing the same type of consolidation in the same space. When the other one I was looking at, I'm trying to find it. Nope, that's one. I had one more example that I really like. If you'll just give me 1 second. I got too many screens up. Oh, anyways, Fox 8's kind of doing the same thing when you look at Fox. And so the entire space, not the entire space, but a lot of what we're seeing here is you've had short-term pain, consolidation towards the lows, multiple tests. I think you could have a little bit of, and it's not to discount Fubu. It adds to Fubu.
I think
right?
it does, absolutely.
It adds to Fubu. I'm saying the sector is showing it. The industry is showing it. You're seeing momentum in the space. I think that does add some credibility to the Fubu commentary.
And so when I see a technical, because, got a lot of choices out there, right? And when I see a technical situation develop, I'm like, it breaks a lot of ties. It breaks a lot of ties for me when I'm analyzing companies that I like. I like Fubu.
And I'll tell you, Fubu's not my company, but
I appreciate the analysis.
I really, really enjoyed the detail of the analysis. I really enjoyed that, Coach Mark. Thank you so much for that.
Well, I don't care if you liked it. I care.
Listen, I still appreciate it after you get killed. We're good.
The Queen is in charge. I want.
Oh, goodness gracious. All right. Thank you, Mark. Tim, you're up next.
All right, let's do it. This one's going to be real simple. I'm going to lay it out pretty directly here. Give me CRM if we can. And a couple things. Number one, and we can even start with technology real quick, Matt. XLK. CRM is a $260 billion juggernaut, obviously mega cap leader in the technology space. It's not performed well with technology recently. It's starting to pick itself up. Tech is our top leading sector right now. Obviously it has got real, a bullishness in terms of that bias. If we go back to CRM, it fits within the overall theme of technology improving, no question about it, but that's not necessarily the only reason I like it. That's just a little bit of gravy right on top. We covered earnings last week, and I got to tell you, I've been investing in CRM for years, and I really respect the CEO. I respect the vision. I like the business model. It's based on subscriptions. It's based on consistency. They don't have to have some big $10 billion sell every quarter to go out and hit their revenue numbers. They actually have very, very consistent revenue growth just from subscriptions alone. Over the last couple of years, they've been in acquisition mode. And if you missed, Tuesday's or Wednesday's show last week when we were covering CRM, there's a couple things they've done. Number one, they bought a company called MuleSoft. They bought a company called Slack, which I think many, many people out there use. They also bought a company called Tableau, which is a data analytics company. All of these companies provide solutions to businesses to help them better sell things, Emily. And one of the number one most important things within any company, obviously, is going to be sales and revenue generation, because that's what continues to keep growth moving forward for a company. These acquisitions are all now billion-dollar brands that are building revenue on their own independently within Salesforce's suite of products, okay? And in the last quarter, they even upped their revenue guidance for the year. And I want to give you a couple of numbers on this. 23% on a year-over-year basis. Obviously, we all have had real strong revenue growth year over year. They increased revenue guidance to $26 billion, which, by the way, if you think about their historical revenue growth, I'll give you a couple numbers. 2017, they did $8 billion. 2018, $10 billion. 2019, $13 billion. 2020, $17 billion. 2021, $21 billion. They're projecting 2022 revenue at $26 billion, and that's consistency. That is absolute consistent revenue growth on a year-over-year basis. It's the way the business model is built. It's sustainable growth, and there's a reason why people have been willing to pay premium. This is a growth company that actually grows. And this is on the backs of, by the way, them increasing their shares into the market. One thing that's kept the stock kind of depressed a little bit over the last year, they have a share issuance program, not a buyback program. They actually are putting more shares out over time because they want more money to continue to invest in these acquisitions and grow. They completed the acquisition of Slack completely this quarter. And if you back out at the big picture chart, Matt, I think there's a storyline here because obviously as an investor, I've been tracking it over and over and over. They blew the doors out last year. You see that huge gap up that ran them from about $200 a share all the way to $280 a share. That created a high base consolidation. It was unsustainable. Then they announced a big acquisition of Slack in December last year, which brought the company back down to reality. They actually did it in correspondence with that earnings in late November, early December around Thanksgiving. The company took about 9 months here, to kind of consolidate, find a base, fade lower, get the technicals kind of in line, get this acquisition done. And now it's starting to shape up. This last quarter, they absolutely had a blowout quarter in the stock. It wasn't the standout earnings from the quarter. We had Dick's Sporting Goods and all that kind of stuff, but they had a very good B+ quarter in terms of earnings. The market rewarded them and gapped them out. Now, I don't like chasing a gap on earnings. I don't think anybody does, especially on a candle like that. But what you do like is you like the formation of these candles the last 5 days. If you loved an earnings report last week, you're waiting for stuff like that. I remember Coach Frank and Coach Matt talking a couple of weeks ago, and they were talking about what they like post earnings in terms of time. And I think they both kind of came to the conclusion, Matt, you can confirm this or not, one way or the other. I like that. But either they like a week pattern, 1 week of time for a quick flag or a quick high base and then a run, or that longer, like month-long pattern post earnings. Matt, do you like this post earnings candle formation the way I do? Because I like those 4 candles.
Yeah, I got this as a flag post earnings that filled the gap. And the only thing that you should be dinged on, and you should be dinged on it aggressively to the point of cutting your head off, is I drew that Fibonacci and you did not mention it.
I'm not going to go after the fib, but I do appreciate that fib.
You're welcome. You're welcome.
I thought you were going to say that he didn't address her as the queen multiple times.
Oh no, he said Emily. He didn't even say M. He said Emily. He said Emily, and I just got the sword out. I'm like, yeah, it's done. It's over. But it has nothing to do with the quality of the analysis or the pick, because legitimately, Tim, you mentioned their earnings. They had a very, very, very good earnings season. The only problem with the earnings report is the gap came into some very well-known resistance levels. You saw me draw it. You see the box up here, the highlighted box. That is the box on the resistance channel where it dinged the last time we saw that blowout just drive up in price. So that's kind of the resistance channel, but you got to love the flag here from a trading perspective with a little bit of a growth story building on CRM. So yeah, I'm definitely interested. But then again, it's easy to sell me on CRM. I'm a Benioff guy. Yeah. So like it's say Benioff, and I'm like, yeah, he's amazing. Pretty much. But in terms of the technicals, I think they're really solidifying themselves. Yes.
Well, and
I still want to say Benioff 3 times to see if he appears.
Dude, is it 3 or 5?
I think it's
by the way, if you missed the podcast last week, Coach Keith told a story about meeting Mark Benioff on that podcast. It was kind of a cool little thing. He was telling stories the whole time, but that was one. And he said he talked over him the whole time. Sometimes these guys with these big brains, it's hard to really connect to them on that level.
And if you're wondering where this week's Trading Justice podcast is, it will come later today.
Yeah, we're going to be doing it today. I do want to give you a couple quick quotes and some ideas on how to approach this one here, Emily. Number one, I'm an investor. This is long-term analysis for me. I love the short-term analysis to support the case for now instead of a different period of time. But I have been an investor for many, many years. I believe in a company over the longer period of time. These are solutions that businesses need. And as companies integrate these softwares, they don't get rid of them. You were talking about Zoom earlier, Matt. As the big major companies who actually build these tools into their programs, as they do that, Salesforce software, CRM software, sales automation software, they don't just dump that immediately.
That's even more difficult than the communication strategy at a company. Once you select a data company, it's more than a marriage.
Mm-hmm. Yeah.
You'll get divorced before you divorce that company.
I agree. And Mark Benioff knows that. He even said this quote here from the earnings report: with companies and governments around the world continuing to accelerate their digital transformations, we delivered our 5th phenomenal quarter in a row. He said our products are more relevant than they've ever been. And I think every CEO is realizing that the pandemic is not going away. We're in a new pandemic world, an all digital world, work from anywhere world, and they're going to continue to build into that. And I agree with that. I think this has been a transformation happening for years now into digital, work from home, using software, that kind of stuff for automation. This just accelerated. And I love where Salesforce is right now. If you ever need to do cover calls, options are liquid, as we all know, still net down about a 2% cover call return. It's not that high of a volatility stock, by the way, guys. This is not some crazy 70% implied volatility, 30% implied volatilities, very consistent in that regard. The options are fairly priced. Generally, a lot you can do with it. Still pick up a couple percent if you ever want to write them. Emily, I got CRM. That's my pick.
So you're not trading the flag. You're saying front run the breakout on the weekly with an investment?
No, I think you can enter on the flag for timing. It's going to go up and test the highs and probably stay there for a while. I think investment analysis is better because if you're entering now on equity, there's a couple ways you can approach it. Enter it now on equity with the flag. When it gets to those highs, write a covered call. Sure, absolutely. Those kind of mechanics are the way I would approach it if it's stalled there. I don't have this as an A grade directional opportunity, Matt, because we are going to be testing resistance.
There's some major resistance up there. Obviously, if you're going to really dive into the investor, you got to hunt for value, in my opinion. You can chase anything, but I think it's concerning with CRM at the highs. I like it better as a trade here, honestly.
Yep. Em, you've got all three.
Okay. All right. Let's go back to the beginning and look at gold. So a couple of things on gold. Definitely, obviously love the space, right? As we are seeing the commodities start to kind of sort of wake up. Some of them are still neutral, but the great thing I love about cash flow is that, you know, I don't necessarily have to wait for those breakouts or, you know, technical patterns to, you know, form exactly to the T where I have to find a proper entry. You know, when I'm doing cash flow, I can just, you know, get in, whether it's a naked put or a covered call or anything like that. Love that support level at 18. And when you first brought this up, I was actually thinking naked put automatically because that's where my brain goes. Anytime I see an inexpensive stock, my brain always goes on the naked put side, and I'm always thinking, how can I catch and pick it up, right? So that's where my brain automatically went, and I was, you know, very much impressed with the ROI that you'd get even just by selling a naked put if you sold at 18. But then talked about a covered call, and I'm like, all right, yeah, you know, whatever. But 2% ROI on top of a 4% dividend, not too shabby. So I actually do like going the covered call route if you don't already have exposure to gold. If you're just trying to get this as a cash flow and just add to your cash flow, then definitely, you know, naked put wouldn't be a bad way to go either. For me, I probably would go covered call just to add exposure to the commodity sector. So I definitely like your play on that as a covered call.
So I heard I'm good. I'm alive.
I'm not done yet. We're not done. I'm just giving you your
I already ran out the door. Like you can't find me. I kid.
Good stuff. Let's go to Mark's pick. Fubu. Is it Fubu or Fubo? I can't.
I always say Fubu, but
I always
think
say
it's Fubo.
I think it's Fubo.
I just like saying Fubu.
Fubu used to be another clothing brand.
Yeah, there's a clothing brand.
Damien John, that he sold to. I don't remember who it was, but all right. So Mark, you are amazing in convincing me to look at areas and spaces of the market that I would like literally stuff my nose at. Like, I'm like, what is that? So this one here, again, is something that I probably it would never come on, you know, in my radar because this is not something that I would probably even search for. But how you put together the, you know, your theses and the theme around it and explaining all of that stuff is really, really convincing. And I love the fact that, you know, Matt always talks about this one, you know, when something has tested support, you know, that's where you can build a house, you know, on that support level there at 25. I love that. You know, it's crossing all the moving averages right now. You know, you've sold me on everything that it's doing. I don't even know anything about it, but you just sold me on the whole gaming thing and, you know, the social acceptance and regulations being uplifted and all those things. You know, I'm good with that. Would I do a naked put? I don't know, probably. Would I go directional on that or do a covered call? That volatility, like I saw that 71 and my face was like, ooh, do I want to do that? Yeah. Oh, okay, here's the thing. 5-year-old me would have jumped at that volatility like it was nothing and just done a covered call and just not even look back. The queen is a little bit more like old fashioned now, right? So she likes, just good old good stuff. So I absolutely love it. I love what, the covered call idea and really going way out of the money. So for somebody who, definitely wants, exposure to this area of the market, that's a great strategy. Naked puts would also work as well, right? So either direction would work for that on the cash flow. So it's another cash flow play. So how can I not like it? But then there's CRM, which I absolutely love. So you guys really brought some good stuff, and I'm having a hard time trying to pick who I'm going to chop off, but I have to pick somebody to chop off. I haven't played CRM in quite some time, so this is something that I'm definitely going to add back to my watch list here with CRM. But again, CRM is CRM. You can't question that. So it comes down to, do I want to add exposure to gold, or do I want to go off, and do something, crazy because Mark has convinced me with FUBO? But I'm the queen. I can't. I cannot. I have to stick with my old-fashionedness. So, Mark, and not for anything wrong with what you brought to the table. I absolutely loved everything about it. But the queen is very, very old-fashioned. And I actually thought when when we started the halftime report today that you were going to give me something in commodities and oil, because you said that you added exposures. So I thought you were going to give me an oil pick, but you didn't. You brought me FUBO, which is not bad either, but I just get to the point. Yeah, I don't want to do it, but I have to, and I have to go with Mark this week, but not for anything that you presented. You convinced me. Normally I would chop your head off on stuff like this, but your theme, your thesis, your everything is very, very convincing. But when you present CRM and gold in that mix, queen has to stay old-fashioned.
Well, I only have two things to say.
You're dead.
One, I don't mind making money on my own. And two, how about them Cowboys?